Hello traders, Gary Wagner here, just after 12 noon in Honolulu, 6 o'clock in New York. It is Tuesday, 29th day of October, 2019, and this is the daily report for gold and silver. There are two primary events this week that traders and market participants are going to focus upon. The first one started today with the first day of this month's FOMC meeting, which will conclude tomorrow. It is widely anticipated that they will announce a rate cut of about 0.25%. The probability, according to the CME FedWatch tool right now, is about 97%. The important thing about that information is it tells us that for the large part, the rate cut tomorrow is largely factored into pricing of both equities as well as gold. Equities were flat, but yesterday, for example, we saw gold under pressure and equities move up. And that tells us that this interest rate cut, which will typically benefit to the bullish end, both stocks and gold, is, at least at this moment, favoring stocks. Let's take a look at current pricing. And traders, the other thing that market participants will focus upon is Friday's jobs report. Now, according to estimates by Bloomberg, they're looking for the addition of 93,000 non-farm payrolls added during October, which is down from the 136 number that came in September. Both numbers are very low, they are tepid, and that they are showing us that the economy is not growing and, in fact, could be contracting. Economists from Benzinga are estimating a growth from 135 in September to 105 in October, so a little bit higher. But the key is these numbers are not optimistic at all. They are looking for an uptick in the unemployment number also. We're looking at gold futures, which is showing a net change of down 70. The real fact is that it lost about $6 in trading in the morning session. $1,490 is approximately where we closed before the break, and that's where we're at. We saw gold trade under pressure for the second day in a row. Silver is currently trading at 1781.5, and the dollar all day has been neither very strong or weak, currently down about 0.08%. Let's take a look at our technical studies. And traders, we are looking at a daily chart of gold futures. As we said, it closed down about $6 today. The big picture right now is that over the last 3 trading days, we have effectively seen the price of gold go from the high, which was hit on Friday at $1,520, down below $1,490. And the key to that is, as we spoke about yesterday, this level, 1493.80, I believe is a fairly important level. It's the 0.23% retracement, and the fact that we found no support in that area. On a technical basis, you have this series of bottoms. These come in roughly at 1380. Below that is this low right here, which I believe comes in at 1464. I also acknowledge that the next set of moves in gold pricing will be directly tied to what the Fed says tomorrow and what the actual jobs report numbers are. It is for that reason to maintain our current neutral stance with no active trades in gold or silver. The next key area that we want to look at, that I believe is the next critical level, is this support line, which has been created from the series of higher lows that we have seen in the market over the last, say, month and a half, beginning at the end of September with this low right here. Because a break below that, of course, will signal lower pricing, and we have talked about the levels that it could go to. But once again, it's a fundamental scenario, and the captain turns the ship, the market will react, and nothing about looking at the wake behind the boat will give us the truth about where gold is headed. This has been Gary Wagner, wishing you, as always, good trading. We will talk to you tomorrow, Fed Day. Bye-bye.